Hello, and welcome back to another episode of Kiss My Assets. My name is Bella, and I'm from Investor Relations, and I have John here with me today. We're going to be giving an update on our 36th Street property. We have renovations going on there, but also a few exciting updates with our Reg D that just passed. This is something that allows out-of-state accredited investors to invest into our Arizona individual offerings, which is great news and really exciting for those that want to be a part of those individual projects rather than just our REIT. So, getting into that, John, for those living out of state that may not know a lot about the key highlights of 36, can you explain where this property is located? What makes it stand out in that area for
Sure.
those investors or
Yep.
those potential investors?
So let me back up one more thing. Uh, we love Arizona, and it's a great market for us, and we have the opportunity to find probably more opportunities than most people to find projects. But it's very difficult to make sense of things right now. And what I mean by that is not a lot of product coming to market. Higher interest rates are making it harder to make sense out of things, and construction costs are going up. So we are constantly evaluating properties. And the reason why this one fit, to get back to your original
Hmm.
question, was uh, this is on 36th Street between the Indian School and Thomas Road corridors. And traditionally in Phoenix, that's been a lot of multifamily, small multifamily, well located projects, well built projects, but also between what I call the Phoenix um, restaurant corridor on Camelback and Indian School, and then there's a lot of retail along Thomas. So anybody who's been in the real estate business for a long time, this translates into a lot of housing that is needed to support those employees. These are employment generators: the Home Depots, the WalMarts, the restaurants, the hotels that are up the street, and this type of housing works perfectly. Um, Venture on 36th Street is a well-built project, two-story, block constructed, all the things I like about it. Concrete floors, not only first floor, of course, but second floor concrete. So it allows us to be a little bit more flexible on the type of flooring we can use. You don't have the sound if you're using hard flooring. You don't hear it downstairs. Um, Couple good things about the project also. So it's all one. It's mostly one bedrooms, not all one bedrooms. And why that's important, I just mentioned that you have a lot of service industry people working there. You don't have a lot of families
Hmm.
necessarily in the neighborhood.
Right.
So what happens is one bedrooms are the most sought after property type or unit type in that area. So
Hmm.
that property works really, really well for us. And we get strong rents, and rents up and down that neighborhood vary from probably a low of 1,200 on some unrenovated units to a high of 1,450 or so on renovated units.
Hmm.
Um, the thing that caught my attention, it was listed by a residential real estate broker who was kind of stumbling, I think, through the process of selling it. Uh, it was in contract with a client of ours from maybe a multifamily that was trying to buy it, but was stumbling to get debt in place because they didn't have the relationship with lenders.
Hmm.
And we basically stepped into their shoes, took it over. And then the other thing that was interesting about it, an unfortunate situation, but the reason why they were selling, the gentleman who had owned the property did all these renovations to the property: new roof, new air conditioning, individual electrical systems, electrical boxes, and individual metering to the property, all these heavy lifting things. And then unfortunately passed away. And his 95-year-old mother inherited the property. And that's why they were selling. So we were able to
Wow.
step into an unfortunate situation that someone else had negotiated a great price on that wasn't able to close it, and then we stepped
Hmm.
in and took advantage of it. So
Right.
that's those are the kind of opportunities you don't see very often, and we're taking advantage of them.
Yeah, and I think that's one thing that was touched on in the previous video about 36 was, with the even if the interest rates stay, we're still in a good spot. If they drop back down, whether it's a little or a lot, that just means more cash flow,
Yeah,
which is great for investors. I know you talked about the whole one bedroom, one bath units and people, people needing places to rent over there. I think some good numbers to share are the current average versus what we plan after renovations. Despite the big renovations being done, I think as you or Jameson like to say, it just needs a little lip gloss or
Lip,
makeup added to
lipstick
it,
and eyeshadow.
lipstick and eyeshadow added
Yeah,
to it.
it's a
But
little bit
yeah.
above that. It again. I think the past owner had bigger plans, and
Hmm.
he took it from what was called a master metered property to individually metered. He put the roof on it. He did air conditioning units. All this stuff was permitted. He added more covered parking,
Uh-huh.
and never had the chance to take it to the point where he's updating flooring, carpet,
Yeah, inside.
cabinets, appliances, all the things that we like to do that we're
Right.
good at. And then because we're efficient at that, we're able to do things like we're doing new front doors, new windows. Um, and these are things that are going to make the property more attractive to renters.
Yeah, definitely. And those current average rents for those listening were $930 a month for one bedroom, one bath units. And then post renovation, we expect to bring those to $1,300 a month
Right.
for one bedroom, one bath. And then the two bedroom, one bath is currently about 1,000 per month, and then we plan to bring it to estimated 1,600 a month.
Yeah.
So
And those are, if
yeah.
anybody knows Arizona, those are conservative numbers.
Mm-hmm.
Like I said, so they were getting about $900 a month on average for the one bedrooms in their current condition. With our renovation and better management, and then effective renovation of the exterior, also new signage, taking those up to the range what I see in that neighborhood. I said 1,200 to 1,400. 1,400 is probably closer to where we can go.
Mm-hmm.
The 1,200 are unrenovated older properties, generally some fourplexes and real small properties in the area.
Yeah. Yeah. Wow. Great. Well, for the renovations that are needed, we have a designer that is going with a modern industrial type of design. You can look on our previous videos for that color palette, but it's beautiful.